Investors are worried about the stock market that is looking for alternative investments in cryptocurrencies like Bitcoin. Therefore, when considering cryptocurrencies, it is essential to access your entire portfolio risks and goals. Welcome back, guys. Today's video is all about whether you should invest in crypto or stocks. Before we begin with it, smash the subscribe button and hit the notification bell icon to never miss out more from us. Brace yourself till the end of the video. And here we begin. So at first, do you know why people compare Bitcoin cryptocurrency with stocks? What are the risks associated with these two? Let's know that before getting to the point. Risk in stocks and Bitcoin. Investments always carry risks with them, and the market can crash down anytime, anywhere for various reasons. Organizations may go bankrupt, or the stocks could rise over time. Weighing risk is essential when you are deciding to append distinct assets to your portfolios. And with the individual stocks, there are higher risks. There is the risk that it will not let it grow and dividends there might cut. And people compare the performance to the S&P 500. It eventually means you are running the risk of trying to keep it up with the Joneses. However, out of these risks, some of them are common with various investments. Stocks are distinct from cryptocurrencies as there are some guidance associated that you can use to understand where the price will go. You can also account for things like the earnings of an organization or its ratio of stock price to understand the organization's financial health. Meanwhile, to your surprise, Bitcoin lacks the predictors that stocks do. Cryptocurrency is entirely speculative and based on demand and supply. All currencies, to some degree, are based on what people will pay. But with Bitcoin and other cryptocurrencies, the case is entirely different. Unlike other currencies like gold or dollar, cryptocurrency is a smaller market regarding its entire size, so it's subject to massive swings. Bitcoin is a new initiative and development that is not yet widely adopted by many investors. That appends a distinct layer of risk because it could replace the other more efficient digital currencies or regulate their existence. What do you think of the risk factor? Do you think investing in cryptocurrency is risk-free or somehow possible for you to gain profit? Keep watching the video to acknowledge the deep knowledge of why you should go for cryptocurrency. Moving on.
Say the value of Bitcoin should be going up. What we've seen in the last couple of months is that people are interested in assets that have high returns. They are willing to take risks, and one of the highest returned, highest risk assets.
History of Bitcoin cryptocurrency and stock. While you cannot afford the future-based performance based on the past, it's useful to glance at how distinct the investments have taken place over time. In 2015, the price of Bitcoin cryptocurrency fluctuated between $200 to $500 per coin. However, during 2017, the price rose higher and reached the range of $19,000 in December, before dropping below $3,500. Alone in 2020, the price of Bitcoin bounced between $3,858 on March 12 and $9,774 on July 5. Stock growth has not been so dramatic, but it's again more stable since 2015. The S&P 500 index also remained at the accurate position of about $2,000 in 2015, while there were some ups and downs since then, as the S&P 500 index is around $3,100 as of July. The DJIA or Dow Jones Industrial Average hovered between $17,000 to $18,000 in 2015. In December 2017, when Bitcoin was at its peak with $20,000, the DJIA was valued at $24,000. The DJIA was worth $25,000 in 2020. The cryptocurrency Bitcoin has been so volatile since its launch as there were no natural ways to value it, and it went to the mind-boggling price of $20,000 because everyone heard the news, and people did not desire to miss it out. Then it went higher to $3,000, and now it is back to $10,000. With stocks, even though there occurs some ups and downs and some volatility in short-term deals, there is an expectation that the stock market would be propped up. And that expectation is not there for any cryptocurrency, including Bitcoin. As stocks are highly established and expected to perform well, they have been supported historically. Historically, the stock market performance has provided about 10% of the annual returns, and the same cannot be said for cryptocurrency.
Bitcoin posed challenges because they are decentralized and takes power from centralized money institutions like central banks. Some countries have actually banned the use of bitcoins in their economy as they consider it to be a threat.
Who is the best fit for cryptocurrency? Bitcoin and other cryptocurrencies make sense if you are seeking some extra diversity in your portfolio. Cryptocurrencies like Bitcoin provide alternatives to regular assets, and it's helpful if you desire to have some digital assets that are not dominated by dollars or other currencies. It's the great way to hold some of those digital assets away from the dollars. And in general, if you will ever feel like cryptocurrency Bitcoin is a great fit for your portfolio, it might not be the primary focus for your investment strategy. Instead, it's mostly about how many risks you have and you can tolerate, and whether you are comfortable with losing among the portfolio or not. If you love the calculus and numbers behind cryptocurrency Bitcoin, then you should consider that it could go to $0 or up to 20 folds. So no matter what percentage of your portfolio you're willing to lose, it just limits it between 1 to 5% depending on your risk tolerance. After knowing who is the best suitable to invest in cryptocurrencies, you might guess who is most suitable to invest in stocks. We are at the peak point of the video, and at this moment, don't forget to hit the like, share, and subscribe button to never miss out on more videos we post. Moving on. Who is the best fit for stocks? For most people out there, stocks are likely to be appropriate for some bulk in your portfolio. This is because stocks should be the primary focus on the portfolio for most people, and you can always come up with a value based on gains. And it's a highly stable investment due to its underlying characteristics. In addition, it's reasonable to suppose that, and even with some short-term volatility, most of the organizations will exist in the future and will provide stability. Therefore, by investing in the exchange-traded fund or the broad-based index fund made of stocks, there is always a good chance that you will be fine in the longer run. Is investing in cryptocurrency worth it? Gone were the days of cryptocurrency Bitcoin when you could buy one of the Bitcoins for less than $1,000. With that in mind, along with all the dangers involved, you may wonder whether it's too late to invest in or not. If you believe in this thesis of cryptocurrency Bitcoin, there are still some good reasons for you to consider it. But you need to be careful of how much of your portfolio you will devote to it. Some people have about 3% of their portfolios invested in cryptocurrencies, and they think it is worth investing in cryptocurrencies only if they fit your goals. Additionally, if you think that it will profit in the future due to its limited production and potential adoption, then it could be worth it as an investment. We know where there are pros, there are cons. And this is the case with cryptocurrencies as well. So here you have the risk factors and dangers of investing in it. What are the dangers of investing in cryptocurrencies? While you are investing in Bitcoin, one of the biggest dangers surrounding you is that it could disappear anytime out of the market. Yeah, you heard it right. It's easy to replace the cryptocurrency Bitcoin with an alternative, as thousands of them choose from it. Additionally, the stock markets have been around in the United States since 700, and Bitcoin is a new asset originating in the late 2000s. The history is not there for cryptocurrency Bitcoin if you desire to have a long-term track record. Another danger is that Bitcoin does not undergo the similar Securities and Exchange Commission scrutiny that regulated the securities market as the stock exchange does. Finally, you need to remember that Bitcoin or any cryptocurrency pricing tends to be more volatile than stocks. The cryptocurrencies leapt to about $20,000 in 2017, were to fall by 82% after a year in 2018. The DJIA worst drop was in the last 10 years, and around 36% contraction was experienced from February to March of 2020. All of these aspects create a higher level of risk and uncertainty that presents the danger for investors. It will help if you take time to perform your research and consider the risk tolerance before investing in cryptocurrency or stocks.
Now, assuming you can and want to hop on a plane to Iceland tomorrow, if the ticket was for a middle seat versus an aisle seat versus a window seat, that would probably have an effect on your perception of the ticket's value.
So that's all with the video. I hope you enjoyed watching it. Let us know whether you are investing in cryptocurrency or stocks in the comment section below. Until the next video, stay tuned and subscribe to our channel for more uploads like this.